let me also record this.
Yeah, so generally the Monday we either put the high or the low of the weekend, right? Or Friday, Monday or Friday.
Yeah, Monday or Friday. So basically this will be the Monday, and this will be the Tuesday, Wednesday, Thursday, this range, and this will be the Friday. So basically around NFP days. I see this. So most of the time, what I do is like I wait for whenever on Monday market opens, I mark these things as a previous daily high. Okay. Previous weekly highs. Okay. And yeah, previous weekly high, previous daily high, and previous
Monthly high.
monthly highs. So basically, this is what I do. And after marking all those things, what I mark is like I mark if the range structure. And after the range structure, I look for the PDRS. Not basically the PDRS. I just look for the fair value gap around the PDRS. Okay.
Okay.
So
So would you mark your range structure? Are you marking the range structure on the M15?
No, basically I mark my structure on 4 hour, and after marking the 4 hour, I go on like 2 hour, 1 hour, and the 1 hour structure and 4 hour structure will be my main structure. Just like
Okay.
if I'm watching, like if you see, this is the 4 hour structure.
Right, and then this here would have been the range, your premium discount right here, right?
Yeah, exactly. So you see, I will select this high to this low as my range, and this high to this low as my range. Why? Because you see, this after making this lower high, lower low, lower high, lower low, this high has taken out this as a liquidity. Okay, so you see, we had a inducement in here. We had an inducement in here. So market just came out and taken out this inducement and formed a new higher high, then lower low. So after taking out this inducement, we have a BMS towards the downside. And we have this range from this high to this low. So again, what happened here? We had another inducement range, and market also taken out this inducement. So we have new formation of range from this high to this low. You understand my point?
Yes. Yeah. I understand that. Yeah.
So this will be probably on 4 hour time frame.
See, sometimes I get confused because, and the way I've thought about an inducement is it's most inducement is a week low or a week high, right? So for example, the top one you marked here as an inducement, it broke structure, right?
Yeah, it broke structure. Yeah, you see, like, but according to like what I have learned yet from the market, so I choose like this will be a weak low for me. Okay, if this high will be the weak low for me if this high haven't taken out any liquidity. So just like if this high has not taken out any liquidity, so this will be a weak high for me. And you see, this high has taken out this as a liquidity. So this will be a strong high. You understand?
Yeah. Okay. So your idea of a weak high or low, it doesn't necessarily have to break structure.
Yeah, exactly. It have to take out the liquidity.
Okay. So that's the most important thing, is taking out liquidity.
Yeah, exactly. So, and one more thing. So you see, this high also taken out this high, previous high as a liquidity. So we have this range structure from this high to this low.
Right. Yeah. And then we would buy or sell in the premium or discount of that range.
And one more thing, you have to see the higher time frame BMS here. Like you have to see the 4-hour BMS for confirmation. And after the 4-hour confirmation, you have to check if price. Wait. You have to check strong high and strong lows. So you see, we might have some sort of higher time frame BMS here. Just for instance, uh, okay, so we have this higher time frame BMS here, and we have this higher time frame BMS as well here, and we have this higher time frame BMS towards downside again. And this is your 4-hour time frame structure. So you have to check the strong high and strong low, strong high, strong low. So we have this rule. Like the first will be the higher time frame BMS. The second will be the strong high, strong low. This will be your range. And one more thing you need to check if the range is correct or not. You have to see the thing if price is bearish. For instance, if price is bearish, you have to check if it came inside the premium range or not. Okay, so just for instance, if this high would have made just below this 50% low, like let me explain properly, making higher high, lower low, taking out this one. Okay, taking out this one. So what we have here, we have this formation of range. Okay, but this will be, you see, this one has taken out the liquidity and came inside the premium range. So this will be your valid strong high, strong low.
Right.
Okay. And you see, this has also taken out the inducement here and also made this high and this low. But this will not be your strong high and strong low, even if that has taken out the liquidity. Because if price has to make the strong high and strong low, it need to come inside the premium range, then sell.
Interesting. Okay, I didn't know
Otherwise,
that.
it need to came inside the 4-hour range. Otherwise, we will look for buys somewhere here to at least come inside or take out this high. So
Okay.
this will be your range. Otherwise, this will not be your strong high. Okay.
And this is on the 4-hour, right?
Yeah, this is on 4-hour. And same thing on lower time frame, like 1 hour to 2 hour, you see structure like this. So this will be your lower time frame range structure. So that is how, like, these rules I have. Try just to make a higher time frame BMS for confirmation of trend, like if price is bullish or bearish completely. I have to check if that has taken out the liquidity for confirmation of strong high and strong low, and also need to check if price is in bullish bearish trend. So you need to check if if market has come inside the 50% of the range, above the 50% of the range or not. Right. So that is the rule for.
So on this second leg right here, you would, if that's a no sell, right?
Yeah, there is no sell. That is the.
What about if it comes up? What about if it comes into the 50% like this or something?
Yeah, that will be the good strong high and strong low. But if that has not taken out any, like that has not come over the 50%, so smart money will be pushing the price again to at least mitigate some sort of 60% or 70% for another cells. Yeah.
Okay.
So, and one more thing, like if this high has taken out this inducement, and after inducement we have, let's remove it. Okay. So now, if this high has taken out the inducement, and after taking out the inducement, what we have here, we have breaking market structure towards the downside. So after breaking market structure, like just you might find this, if this is 4-hour time frame, so you might find breaker structure, breaker block around here. If you have studied the ICT thing, you know breaker block, bro.
I've watched your video of breaker block. Yeah.
Yeah. So you might find a breaker block on 1-hour time frame refinement, and just around the 1-hour time frame, you might find some sort of hissing candle here as a hidden base.
Above the breaker?
Yeah, just above the breaker.
Okay.
So this will be your secondary point of interest right here. And for confirmation of this breaker, you need to have some sort of like drop, base, drop. So this base will be the inducement, and just above this base, you might have some sort of this. You might have this as a breaker block. All right. So you might have this as a breaker block, and just around the breaker block, there will be a formation of the base drop, base drop. So just above this base, you might find a hidden base in here. Okay. So you might look for, this will be your secondary point of interest. And this will be the liquidity area. So if there will be no liquidity, like if there is no formation of base or an equalize or trend line kind of liquidity, so this will be a very weak zone for any kind of cells. Did you understand my point?
Yeah, I understand. Yeah. So the breaker is just, we're not really going off the breaker in this example, right? We're just using the breaker as just a point of interest for a hidden base that would be above it.
Yeah, just above it. And for more confirmation, you need to have some sort of, the main important thing you need to have here is the fair value gap.
Right. That's
if
most
there
important,
will be,
isn't it?
Yeah, if there will be the fair value gap, so this will be the most important thing for you for confirmation of the cells.
Okay. And if there's not a fair value gap under the hidden base?
So I will not take the cells. This will be the less probability trade.
Okay. On the 4-hour, right?
Yeah. Oh no, this hidden base I might find on 4-hour time frame, but I will refine it under the 50-minute or 5-minute time frame to find a candle, and just below the candle you might find the fair value gap. So I will only select the candle only. Okay. So this is the thing. And one more thing I do, like this is the candle. This is the candle again. And this is the candle. Okay. So there are 3 candles here. Just below this candle. So what happened next is price making lower low, lower high, lower low, lower high, lower low. Okay. So this is the candle here. So if there will be the fair value gap here, This will be the fair value gap here. So what you will do now, like 1 second. We have a BMS here, just for instance. So tell me what you will do.
Okay, so we got most likely we have a breaker here.
Hmm.
We have most likely inside this, if this is a 4 hour, most likely there will be a hidden base inside here. And I'd probably set my alert right here at the beginning of this fair value gap. And then I would look for a QM inside this area.
Okay, what if there is no hidden base? So like I want to know, like, what would you would have done if you didn't know about hidden base thing?
Okay, so if there's no hidden base, then I would wait for the break. And then once I got the break, I would come up. This most likely then will be used as an inducement. Price would come up most likely and tap into here. And then I would go down to a lower time frame and I'd look for a QM.
Okay. So let me tell you.
Inside this here, I would look for something.
Okay. So let me tell you one thing. Like, what makes this candle a high probability trade, or what makes this candle as a low probability trade? So just for instance, like if this candle wick has taken out the liquidity, like if this candle wick has taken out the previous liquidity.
So that here, my range would be from here to here, and I need to be in 50%. So I'd have to have something come into here, right?
No. I'm talking about another thing. So if this wick has taken out this liquidity,
right, that's a sweep.
So this will be a strong high. Okay, so that will be a good and a strong zone for any cells.
Right.
Okay. And if this candle would have not taken out any liquidity, and this candle has taken out the liquidity here only, and we might have this candle just below this candle we have the fair value gap. So if we might look for cells from here, so this will be a low probability trade.
Okay, I didn't know that.
Because you see, as you can already see, like this candle has taken out the liquidity, but this has not taken out the liquidity.
Because there's liquidity above it, right?
No.
Right here.
Like even after the BMS, like this candle has not taken out the liquidity from where we are looking for cells. But this candle has taken out the liquidity. But the fair value gap is just below this candle only. So like I will reduce my risk if I will looking for cells here.
Okay.
Yeah. So that is my view. Like what makes this
okay, so you're saying that because this candle's wick did not take out this liquidity right here, this zone becomes more lower probability.
Yeah, exactly.
Okay, and then what time? Does it matter what time frame this is? If it's
like
an M5,
whatever. No, like this could have 150 minute or 1 hour time frame. Like
okay,
every time frame we have same. Like there is nothing.
It's fractal. Like, that's right.
Yeah. So every price time frame we have same. That is how
some will have wicks and some will have bodies, right?
Yeah, exactly. That is how I select my point of interest.
So, yeah, because you're getting like wick entries. The entries, some of your entries are just I just can't figure them out. I try to look back and I just don't know how you're able to get the wick entry like that, right?
Whenever you get time, like whenever you need another session, I will do that. Like in this one, I will just explain the basic thing.
That's right. Yeah, that's fine. Yeah.
So basically, and so what I was explaining here is the momentum thing. Many people don't talk about the momentum, but yeah, momentum is a very strong concept for having a bias. So like you see price making higher high, high. Okay, so you see from this low to this high, market is bullish. So this low will be a strong zone for buys because you see buyers are in control here
Right.
and market
Your
also taken
sell
out.
stops below, right?
Yeah. The market also taken out the liquidity here. Same
Right.
thing here.
So it took liquidity and it broke structure, which means it would be a high probable zone to look for lower time frame entry.
Same thing here. You see this low has taken out the liquidity
And broke structure.
and just for instance like these moves have from this high to this low, this move have taken out 3 days to form this whole zone, but from this high, this low to this high only taken out 1 day only. So this is how I determine the momentum. So like the buyer momentum is strong, so this will be my high probability zone here.
Right.
You understand?
Yeah.
So,
And you want to see a fair value gap above that, right?
yeah, exactly. So that is how I see. And like if price making higher high, higher low, 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 higher high, and lower low again. So and even if that is there is something like something a strong supply demand zone here, strong demand zone here. So what you will do, like even so what you will do?
What I would do in this situation here,
Yeah, like even if we have a H4 BMS here and we have H1 BMS as well towards the upside and we have 50-minute BMS as well, and you have all those things which is called as the QM candle or the fair value gap, everything you need to have. So what will you do? You will look for buys or you will wait?
oh, because there's so much momentum, it just depends on, what is it. If this is a big, huge push down, I don't know. I don't know. It'd be a risk. It would be a risk trade for sure. Risk entry.
Yeah, exactly. You see, from just for instance, like from this
I
low,
want to see. I want to see compression coming down to my POI, and then I want to look for a QM on a lower time frame.
just for instance, like from this low to this high, market has taken 1 week for this whole zone to form. Okay.
Yeah.
So buyers are in control here. But from this high to this low, market has only taken out uh, only 1 or 2 days for sales. So
Right.
sellers are in control here. So this from if I will not look for buys here because you see very strong low weak momentum here we have.
Yeah. And it's got everything we want. It's got the inducement there. It's got a fair value gap. Yeah. It has nice POI. It's a nice trap is what it is.
Yeah. But we have a very like momentum is very weak here from this low to this high. But you see, we have strong momentum here from this high to this low. So the high probability trade will be here. This is sponsorship candle and then hidden base you might find in here. Did you understand?
Yeah, I do. Yeah, I do.
Yeah. So this is what
it's easy to fall. It's easy to fall for that if you don't take those things into consideration, right?
Yeah, exactly.
So yeah.
This is what
I've got burned a few times trying to get involved in situations like that. It just runs right through it like nothing.
Yeah. So this is what I do, like how I see the momentum thing and the range structure, like from formation of the range, like if this range is correct or this range high is correct or not, or this range is low is correct or not. Price has to come above the 50% of the zone, right, and take out the liquidity for correct inducement. Sorry, the correct range high or correct range low, and the momentum thing here.
I did not know that. That's good. I'm glad that you taught me.
Yeah. So just mark out those things in your chart, like whenever you see those things. So after you backtest some of those things in your chart, like just start putting these things in your chart. So let me know after. I will do the another session maybe tomorrow or day after tomorrow whenever you're ready.
Well, okay, brother. I really appreciate that. Thank you. I'll do that. I'll do that this evening.
Yeah. Okay. So